Hello and welcome to Guide to Understanding Tax Sales. I'm Brandon Howe with Terry Howe & Associates, and I'm an auctioneer and real estate broker that helps South Carolina tax collectors with their delinquent tax sales and forfeited land commission sales. And I'll be your host for this video. If this is your first time participating in a tax sale, then you've come to the right place. We're going to provide you with the information you need to understand how the tax sale works and how you can participate in the auction. So let's go ahead and get started. First thing I want to let you know is this is not going to be a full explanation of the tax sales, but what we are going to cover are the steps that will help you participate in the tax sale. This includes things like how does it work? How should you prepare? What happens at the auction? How does the redemption process work? Or how does the deed process work? These are the things that the county tax collectors want you to know before you arrive at the tax sale and participate. Last thing I want to let you know is that I'm not an attorney or a financial professional. You should contact your own attorney or financial professional before participating. Okay, how does it work? When you attend the tax sale and bid on a property, the county is selling the lien for the prior year's delinquent taxes. So if the auction is held in 2022, you're bidding on the 2021 taxes. The auctions are held once per year. Typically, they're held between October and December. You'll get notification depending upon the county. The list of properties is published 3 weeks in advance. However, this list is subject to change. As delinquent taxpayers come in and pay their taxes, they are removed from the list and removed from the tax sale. The county does hold a live auction for the tax sale, and you must attend in person. Most counties these days are requiring you to register in advance, and you should see the county for specific instructions for how to register for their particular tax sale. So how should you prepare for the tax sale? First, you need to know what you're planning on bidding on. Whether it's a property next door, a property across town, or a property in another state, you need to kind of determine what the property is and what you want to pay for the property. Some of the ways you can do that is researching the property. That includes using tools like the county assessor website, the GIS mapping. It may include doing a title search or a lien search on the property to see if there's any other outstanding liens or if there's a mortgage on the property and things like that. You may want to hire an attorney to assist you with this. And finally, you want to make sure that you have the funds available to purchase the property. Payment is due in full on sale day, and the counties do require cash or certified funds at that time. So if you don't have the funds, please do not bid in the tax sale. Next, let's talk about what happens at the auction. So you're going to want to pay really close attention to the auctioneer. He's going to be in charge and tell you which property is being sold by calling out the tax map numbers, the taxpayer names, the opening bids, and things like that. Some counties do put this information up on a video screen for you to see, but either way, you're going to want to know exactly what's being sold so that you can bid on the property that you're interested in at the right time. As an auctioneer, I find it very helpful for you to raise your bidder card to bid versus trying to nod or wink at me. Be sure not to bid on the wrong property. That's why I want you to pay really close attention while you're bidding, and that way you end up with exactly what you came to bid on. There is one thing that you do need to know about multiple properties owned by the same taxpayer. Since all the properties are sold individually and in order, if the first property brings enough to cover the total taxes due by the taxpayer, then any additional properties owned by that taxpayer will not be sold at the tax sale. So if you've got your eye on one, just kind of watch out for that and make sure that you know what's going on if there are multiple properties owned by the same taxpayer, because some of those may not be sold at the tax sale. And finally, you do want to pay for any property you win. Full payment is due on sale day, and again, cash or certified funds. Last thing you need to know about what happens at the auction is if you do bid on the wrong property or you decide not to pay for the property that you won, that the county is going to charge you a $500 penalty for doing that. and they may revoke your bidding privileges for future auctions. So that's another reason why you want to pay really close attention to what happens at the auction. So what happens next? What happens after the auction? Well, first thing you need to know is do not go to the property or contact anyone living there. You do not own the property yet. There are a couple different options what happens, but really you need to know that the delinquent taxpayer has 1 year to pay the back taxes, including penalties and interest, and this is called redemption. So you're not going to own the property for at least a year. If the property is not redeemed, then the county will issue you a tax deed. So let's talk about redemption. So if the property is redeemed, you do get your money back, and you also get some interest. If it's redeemed anytime during the first 3 months, you'll get 3% interest. Anytime between 3 and 6 months, you'll get a total of 6% interest. If it's between 6 and 9 months, 9% interest, and you can earn up to a total of 12% interest if it's redeemed between the 9th and 12th month. One thing about the interest that you do need to know is that it is capped at the total taxes due at the time of sale. So for example, if there was $1,000 in taxes owed, you can earn a maximum of $1,000 in interest. So you do need to keep that in mind when you're bidding. And if the property is redeemed, the county will send you your funds plus interest. If the property is not redeemed during that 1 year redemption period, then a deed's going to be issued to you. It may take a couple of months to get it filed. The county has a lot going on there as the tax sale winds down and the redemption period winds down, so just be aware that it might take a couple of months. You would be responsible for any new taxes for the subsequent years. You may also be required to pay the recording fees and the deed stamps for recording the deed. The tax deed is not a warranty deed. The tax collector does not warrant title, and there could be other liens on the property. And that's why at the beginning of this video we did talk about getting an attorney to assist you with this. So it's like a quitclaim deed. Tax sales can be avoided anytime prior to the issuance of a deed. And finally, I do want to say that this has not been a full explanation of tax sales, but hopefully you found it helpful to you about finding out what goes on at the auction, how you can participate in the auction, and what happens with either redemption or getting a deed. There may be some additional steps that you need to take to possess the property or to quiet title after the auction. If there's an occupant in the property, you may have to go through an eviction process to get that occupant out if you so choose. Or you may need to quiet the title if you have other plans for the property. So that's why we do recommend that you consult your attorney or financial professional before participating in the auction. If you have any additional questions about properties that are included in the auction or not included in the auction, you would want to contact the county tax collector about the individual tax sale. So hopefully you found this helpful, and we look forward to seeing you at the auction.